So this morning when the bell rang, in terms of some basic VWAP. So we've been talking in the chat rooms, especially when it comes to day trading, what are some of the early signs that a market could be open to one-way bullish, one-way bearish, or two-way trading? Now, what does that mean? Am I looking only for longs, which actually has been the way that I've been operating as a day trader since November 3. It's been far more high probability than being two-way or shorting. And so two-way would, of course, be open to long and shorts. And short only would be, well, you guessed it, short only. But one of the easier ways to determine if you want to be a two-way trader as opposed to a one-way trader, and I don't know anybody who would only be looking for shorts right now unless they just hate their money. We want to remember to re-anchor our VWAPs. So I use a 10-day rolling VWAP. So yesterday, April 2/2 would be day 1. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this would push me out to an April 13, okay, an April 13 anchored VWAP. The other anchored VWAP that I use is the rolling 10-day. So I'm looking at a rolling 10-day VWAP. That's the 10-day. And the other one I look is it anchored to 1 month. So rolling 10-day, which you have to update every day. And then a single VWAP anchored to the first of the month. I do not believe in rolling volume weighted average prices. I want to focus on anchored volume weighted prices, or an AVWAP as sometimes they're called. Okay, so let's zoom back in here. And this is the other, you can see here, the 1st of April. All right, now what does that tell me? If on the open we are in between those two lines, there is a chance we could see some two-way trading. Okay, but I will say as long as we're above the VWAP anchored to the 1st of the month, I still think the general path of least resistance is higher. If we open above both, well, that's an easy keep looking to the long side. So I think some traders might have woken up this morning thinking, well, the markets could go either way. But what's the overriding factor for me? The overriding factor is going to be a combination of double green down here and being above the 1st of the month anchored VWAP. That's really enough for me. I will tell you, there are days, and we've had some this week, there are going to be days where the markets are going to grind lower. Now, yesterday was a deceptive kind of candle because it looks like it ground lower all day, but we know that wasn't the case. In fact, sticking with this bullish directional bias, we had a great morning of trading some options. We got long, we got long DIA. We set up a signal for the IWM. I didn't take it though, and we set up a signal for QQQ. But we looked at 3 specific trades: Russell, Dow, NAS. I took the IWM, put it aside. But I did take the QQQ and the DIA trade. It was in the afternoon that news hit, sent the market lower. But here's another really important part of my day trading window. So we have our day trading directional bias. Okay. We have our day trading anchored VWAPs, right? And we have our day trading window, and that might be the most important window or most important thing here. It's hard to call one the most important, but this is pretty important to how I trade. I look at trading the market 9:30 a.m. Eastern to 11:30 a.m. Eastern, and then I will manage what I have, but I will not continue to look for new trades, which means by the time the market got sent lower by and it's hilarious to me that this was news that was known 18 months ago. This was news that was known that morning. And then I believe Bloomberg had released it on their station or on the website in the afternoon. And suddenly then the market decided, like an unpredictable 3-year-old, which is what the markets truly are, the tantrum was thrown midday. Mind you, during the midday doldrums, which is reason number 412, I like to remind everybody, let's be out of the markets, or at least not look for a lot of active entries during the midday doldrums, 11:30 to 1:15 p.m. And yesterday was a terrific example of that. So This is how we start with the daily. We start with the daily, and a lot of day traders don't start with that daily time frame. Gang, the daily time frame, I don't want you confusing me with saying this is the most best time frame. I don't believe in a best time frame, but it is the most psychologically significant. So if you want to get an idea of the psyche of the market, take a read on that end of day or daily time frame. All right. So having said that, today's action was pretty much a breach, and that was it. So let me talk to you guys about surfing the wave. All right. That's probably going to be the best example today of what we did. Now, whether you're an ETF options trader or you're a futures trader, mini, micro, options in the futures, gang, that's the choose your own adventure, because these strategies and the timing, they're going to be identical for someone who wants to buy the S&P mini as the micro, as someone who wants to buy the S&P futures long call, or as someone who wants to buy the SPY or SPX long call. The zones are the same. Which one of those symbols you want to use to engage the market, that is your call. That is your call, 100%. So what happened? Really simple, gang, step by step. Step 1, the market breached. Step 2, hit the wave. You don't want to really look to surf the wave. You don't want to start channeling your inner Laird Hamilton until we breach, okay? So let's take a look at another example. Let's jump on over to the YM. Same idea. What is a breach, by the way? It's taking out the 30-minute high. 9:30 to 10 is the clearing range. Did we break through the high of that range? If we have, that is, in a word, a breach. Okay, so then let's rewind to the morning on the YM. Now, I will tell you, most mornings don't look like this. So if you look back on your day today and go, man, that was some great trading, please make sure you realize the market went straight up today. Not that I'm taking anything away from the trades, but realize the strategy was pretty simple. Start with the daily, have that directional bias, wait for the breach, which we got, and then surf the wave. Does the wave always set up a trade like this? Oh gosh, no. It just happened to be today was one of those days. But I want to show you, using the YM, why it's so important to think about that cutoff that I've shown you here. Because part of the nuance of this is really to start winding down around 11 a.m. and that European close. Look at how the market started to move sideways. That's where some traders start gearing up. You want to already be ready to go, hand on the keyboard and mouse at 9:30, ready for trades. Not trading, mind you, but ready for trades. And then by 11:30, you're winding down, you're cooling down. Let me show you why this is valid. And then I think a lot of this will make sense. And we'll just jump into the NQ for this example, but it looks the same across all three indices. Take a look at the day. This is very cool information. This is the hour that your bell rings. Take a look at where you get the most amount of price movement in the morning, accompanying the bell, and then the next hour, 10 to 11 o'clock. That's where most of your volatility, this is price movement range. This is where most of your volatility is occurring, right? Look at what happens after we end the 10 to 11 o'clock hour, because right here, this is 11 to 12 o'clock. Look at how we dropped. Look at how the volatility drops. You're going to notice the volume is going to do something similar. That's why we start to check out around that time. This isn't a random thing. This isn't because the caffeine worn off or my stomach's grumbling for lunch. That is what the midday doldrums look like from a price movement range perspective. And if you have these understandings, gang, of the market from a day trading, just what we've gone over right here, you're going to have a whole lot more confidence following the kind of things that I do and why I do it. Okay? So there's our day trading recap here with a really big emphasis on all the things that we do before, frankly, the bell rings, what we can assess during the clearing, and then really the main setup that we saw after 10 a.m.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me